How do I sell a business that's not profitable? Hi, I'm Jeramiah Townsend. I'm the business broker advisor, and today I'm answering the question, how do you sell a business that's not profitable? It comes up a lot of times when people want to sell a business. They have a good job, they have a good business that provides them a decent living for themselves and their family. It's taken care of them for many, many years. And now they're ready to retire. Maybe they're looking at divorce and they're looking at separating ways and they need to divide assets of the business. It could be for health reasons. It's lots of reasons. Maybe they're moving. Maybe their spouse got a new job. Lots of reasons people want to sell, but the question is, how do you sell a business that maybe doesn't show profitability? Because as business owners, we want to show the least amount of income, so we pay the least amount of tax. So how do you sell a business that's not profitable? It's a lot easier than you think. This comes up all the time. So as a business broker, the first thing I'm going to do is a business analysis. I'm going to do an assessment on the business that creates what we call a business assessment and a broker's opinion of value, or a BOV. And this is where I look at the company, I look at all the financials over the last 4 years. I will do what's called a recasting of the financials, where we add back in all the things that you wrote off, that vacation that you might have had some business expenses associated with, the company vehicle that you're using for personal uses, the cell phones, maybe the related stuff that's related to the business, but you might have written off for justifiable business purposes, so you didn't have to pay taxes on it. We'll have a bottom line number when we recast your financial statements. And when we do that, we'll actually usually see your business did have quite a bit of profitability. And then we base the sales price off of that number down there. Now, what can you do if you don't even have that? What we do in those situations is we look at the three basic methods of valuing a company. And I use the acronym AIM. If I was really fancy, I'd have this little box pop up. It says AIM for valuing a company. I'm not that fancy. AIM stands for asset-based, income-based, and market-based. So there's an asset value, an income value, and a market and value of the company. It's very similar to real estate. Now, in real estate, they use what's called the CSI method. I think I might have been the one to coin that phrase, but the CSI, which is a cost approach, a sales comparison approach, and a market approach. But so in business valuations, use the AIM method. Is it an asset value for the business? Because the business might only be worth the assets. As an example, let's say you have a dump truck business where you're driving a dump truck. You have a good business. You're making a good living for your family. However, that business model may be easy to duplicate for anybody who can get a commercial driver's license or any licensing that's required for that business and the equipment. So unless you have something unique, the business might only be worth what the assets are worth in the business. That's very, very common for a lot of industries, for a lot of businesses, construction companies, plumbing companies, a lot of businesses, even professional service companies are often only worth, like a doctor or a CPA, are sometimes only worth the value of the assets that come with the business. So this can happen in any industry. So you shouldn't feel bad about it. Just realize the asset value is one value of your company. And that's how you would end up selling the business. You base it off of what are the assets worth being sold on the market today. Now, as an example, you can't justify an inflated price. So you can't say, my work truck cost me $80,000. So I'm going to charge $80,000 for my work truck, especially if that work truck is 10 years old and it might only be worth $5,000 or $20,000 on the market today. The question is, what are those assets worth if you sold them on the market today as used assets? And that can be really hard, really hard for some people to get to. In one company that I owned, I've owned several businesses, and in one company, we had purchased an asset for about $950,000, almost $1 million. And 15 years later, we went around and to sell that asset, I could only sell that asset for about $50,000 on the market, because the market had changed, the equipment demands had changed on the market. And so that asset itself had gone down on an asset-based sale. So that's something for you to consider. And it can happen fast. It can happen in as little as 2 or 3 months. You know, when you buy a new car, you drive it off the lot and the value immediately drops about 20% or so as the story goes. So the asset-based value is one way of selling a business, even if it's not profitable. So you're not basing it off of the income, you're basing it off the asset value. The next way that you can think about selling a business, even if it's not profitable, is either the asset value or the market value. You might find that you have a very hot business to sell, even if it's not showing revenue. We often call these companies a pre-revenue business. And these companies, as an example, with the health issues we had in 2020, 2021, and the shutdowns, valuations on internet-based companies skyrocketed, even pre-revenue companies. So these are companies that might have a value to somebody because of the market demand. So that's an idea. The third way of identifying is finding a strategic buyer. And we always look for strategic buyers for a business, but this is something that you should give a lot of consideration to when you sell any company, is who would value your business the most. Now, mind you, this does cost money to make phone calls, to reach out with letters. As an example, I was approached the other day about helping somebody sell an insurance company. And so I did a little bit of research, and I came up with 100 highly targeted companies that were specifically in their general area and specifically would appreciate buying that target acquisition. It was easy to come up with a list of 100 businesses, and I had phone numbers and names, addresses, the whole 9 yards. I even had the cell phone numbers for about 80 of those companies to the CEOs. But then you have to make those phone calls. And so you might have to make 2, 3, 4, 5 phone calls to get in touch with the right person at every company. So if you have 100 businesses that are looking to buy, you might have to make 500 phone calls. And these are not short, simple phone calls. They can be quite complex and take a lot of time. You also might want to send out a letter or a mailer to each and every company. That's actually part of the process. So you can spend, even on 100 people, you can easily spend $1,000 to $10,000 reaching out to those 100 buyers. Now, why might you want to do that and spend that money and invest? You just told me, I'm not making any money. Why would I spend money trying to sell a company that's not making any money? That's exactly why you spend that money. You have to do it on a case-by-case basis and a situation-by-situation basis. If you don't have the money, you don't have the money. You can't spend it. I get that. And we just shelf that. But we find out what you can do to find you a very highly qualified buyer who will value your company and who will pay as much as we can possibly get in buying or selling that company. That's how you sell a business, even if it's not profitable. It's not an issue. It's not a concern for a business broker. This is why you hire a business broker. I'm Jeramiah Townsend, the business broker advisor. I help people buy and sell companies. So I'm going to leave you with this. Like and share this video. Make sure to share it with people. Make sure to tag people. But here's the question you have to ask. Who do you know who wants to buy or sell a business? Let me know and I'll help them. I'll send them a very polite request introducing myself and seeing if it's a good fit for me to help them save money and make money buying and selling a business. Thank you.